Hey everybody, happy Wednesday. Today is July 24th, and as we promised you back on June 6th, we would meet here again and talk about the Bank of Canada's rate announcement. So today, Josh is joining us and he's going to spill the beans on what the Bank of Canada did today and what kind of action steps we can take. Thanks for joining us, Josh. How are you?
I'm doing great, Jay. Thank you so much. And like you just said, the Bank of Canada announcement did happen today, and it was a good one. It really did match what the market was expecting. And so, what I'm going to do is I'm going to tell you a little bit about that here. The drop today was 0.25%. That means the rate at the Bank of Canada that was 5%, it dropped to 4.75% in June. It dropped again today to 4.5%. And RBC earlier this month, they told us that including today's rate announcement, we can expect the rate to drop 1.5% more after today. So that will bring the Bank of Canada's rate down all the way to 3%. But don't let this confuse you, because nobody actually borrows money using that Bank of Canada interest rate. But it is the interest rate that things like the prime rate are based on. So what this change today does is it changes the retail prime rate. That rate was at 6.95%, and all of the different lenders, as the day progresses, are going to be dropping that down to 6.7%. And that's going to have an impact on existing and new adjustable or variable rate mortgages. Most of those will be at about 5.75 or so percent instead of about 6%, where they have been for the last 6 weeks. So if you have an adjustable rate mortgage, it's possible that your rate will be a little bit different than these, simply because the discounts available from Prime do change from time to time. Now, 0.25% isn't actually a really big change. You know, if we step back and look at it, for every $100,000 that you're borrowing, assuming it's on a 25-year mortgage, it's going to have an impact of about $15 per month on the payment. But you know what? If we couple this with the rate drop that happened in June, and say use a typical $400,000 mortgage or so, that is actually going to have a bigger impact. That's going to be about $119 per month, as the rate dropped from about 6.25 now, after two drops, down to about 5.75. So anybody with that is feeling a little bit better. Anybody considering the variable rate instead of the fixed, it's still going to be a little bit higher interest rate. But we'll talk about that here in a minute. The payment is going to drop on that same $400,000 mortgage now from about $2,619 down to $2,500. Still, obviously, a big monthly payment for people. As we continue to see the rates drop, that's also going to drop. So there is expectation of an additional 1.5% of interest rate decrease from today. So if today's Bank of Canada rates 4.5%, by the end of 2025, we can reasonably expect that to come down to 3%, which would take a variable rate today at prime minus 1% being 5.7. A year and a half from now, at the end of 2025, that interest rate would be dropped down to about 4.3%. Now, variable rate mortgages still are higher than the fixed rate mortgages that are available in the market today. A couple of years ago, when interest rates started to increase, we saw that the fixed rates began their increase before the variable rates started to increase. And so there are a handful of my clients who did take variable rate mortgages in that window of time. And of course, we know that the variable rate mortgages unfortunately increased more than anybody really expected. But the reason the fixed rates move first is because they move in anticipation of what the market's going to do. And so as of today, the fixed rates that are on the market, we're already pricing in the interest rate drop that we received today. We might see a little bit of additional discounting on that, but not a ton. So today, if we were to come to market, look for a brand new 3-year fixed rate mortgage, widely available. I have a rate of 4.89 or so percent. On a 5-year fixed rate, I do have some lenders down to 4.64%, and those compare to new variable rate mortgages at 1% below prime at 5.7. However, those variable rate mortgages over the next year and a half would likely drop that 1.5% more, bringing those rates down to 4.3. So that really does introduce and invite a real serious discussion about whether a 3-year fixed, 4-year fixed, 5-year fixed, or maybe a 5-year variable rate mortgage might be the right thing if you're a first-time buyer, or if you're looking at doing anything else with your mortgage, or maybe if your existing mortgage is up for renewal here. We do expect some more interest rate drops again before the end. As these happen, we likely will start to see more real estate activity. We know already that prices in Edmonton have been kind of stabilizing. It's the most affordable housing market in Canada, but still expensive. So hopefully we feel the relief from these interest rate drops, Jay, and start to see people who've been maybe waiting on the sidelines. Maybe you're about ready before things get too crazy. It might be a good time to consider getting into the housing market now. So Jay, that's what I've got for you. Thank you.
Great. Thanks for that, Josh. That's a lot of information to digest. Of course, you can always reach out to us if you have any further questions about what to do with your mortgage going forward. My number's on the bottom of the screen as well. So we're going to meet you next time here on September the 6th for the next announcement. But of course, we always release these videos on Wednesday. Next Wednesday, we're going to have another exciting topic for you. So please like us, subscribe to us, click the bell, and we look forward to seeing you again next week.